What is going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some of the current data points, break it down on what's really happening behind the scenes, go over everything else that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So SoFi is recovering fairly well, as I said in my video yesterday, as well as my pre-market. It most likely was going to trade between that $6.91, very strong support, and $7. And lo and behold, this is basically where it's been trading, currently up 1.76%. It's about 2.5 hours before the market does close, so you never know. There could be a nice last minute push higher, but I think based on what has happened so far, it's kind of reached its peak. 14.18 million shares being traded, 44.9 is the average. So once again, this whole week has been just institutions getting in, not necessarily algorithmic trading. So these are some of the transactions that have occurred so far today. So you do see some pretty good buying first thing right here. But still, aside from that, it has been relatively quiet. No official news from SoFi whatsoever today. There was a couple additional 4's that were submitted after hours yesterday. So you did have one at 2:08 that was submitted. That was Anthony buying. This 8K was associated to their shareholder meeting, just the results from the May 21st. Then you did have 4 right here, all submitted roughly around 6 o'clock or 6 p.m. And it is these right here. So this individual did obtain about 26,000 shares. And so they did exercise their RSUs. You can tell that based on transaction code M. So this individual, 26,249. Same for Bashir, who is a director. You can kind of see all this information. It all did occur on May the 21st. On a side note, you had a couple others as well, so Clara and Harvey. And you can kind of see right here, these are some of the recent transactions just added now. So RSUs being exercised is always generally a positive thing. As long as they aren't immediately selling, you do have some of those officers sometimes that as soon as they get shares, they like to dump it on the open market, which usually isn't all that great, but we'll just have to wait and see in the next couple of weeks what they ultimately do. Aside from that, like I said, no official news. It's just been piggybacking off of the broader market, which has largely been rallying from yesterday's somewhat overreaction. You also do see shorts returning some shares, 197,000 shares to be exact right now. I don't know if that'll change near the tail end because, like I said, if there is maybe a last minute push to possibly $7, you're going to see shorts a little bit more active just to ensure that it does not close above, or I guess $7 or above. So this is why you'll probably see a close, funny enough, at $6.99 exactly, but 16.53 or 16.53% of the free float is being shorted. Utilization 70.07, 171.68 million shares overall are being shorted, and then cost of borrow average is 1.03%. Just want to draw your attention to options. So 1.65 million in calls, 655 in puts. So dollar value wise, in comparison to even yesterday or like a couple of weeks prior, seems to be very much dropping. So people aren't that optimistic or wanting to get into SoFi, I guess, through options. 53% of all the options being done today, though, are optimistic and bullish. I actually did sell some calls first thing as soon as it kind of bounced off of this $7 range. I knew exactly how today was going to play out. So I sold roughly, I think it was 50. I didn't get much. It was only like $70 essentially, but I did sell 50 calls at that $7 mark because yeah, SoFi always struggles with that. Very, very predictable. So yeah, you might as well benefit, even though it's not all that much, still something to keep in mind. So when it comes to next week, or even I guess with this week in mind, with it closing, so May the 24th, you do have 24,000 in open interest at that $7 mark. So if there is somehow a last minute push above 7, then you'll see a nice bump up on Monday as market makers go to the open market to buy that 2.4 million shares associated to these call options right here. Going into next week, though, you already do start to see some walls being formed at that $7, $7.50, and $8 strike prices. So maybe next week might be a very similar scenario to this week, where you just see artificial walls being created. So again, it's just constant manipulation, and you can kind of even see just the overall sentiment isn't positive. I think a lot of people generally do like SoFi, the physical stock itself, the results that they get and what they're trying to do, but dealing with any stock and having constant manipulation is very, very draining. especially when you do see just brick and mortar banks going up. And then SoFi, which has a significantly more growth than a lot of those brick and mortar banks, like it just doing nothing, if anything, or if not trending down. It is very, very discouraging. But aside from all of that fun stuff, like I said, these are some of the transactions that did occur today under the secondary market. These are the ones from the dark pool. Dark pool, as usual, very popular. 1.17, 1.11, 1.39. Quite a lot though. So definitely, as usual, very, very popular. One thing as well I just want to play near the tail end of this video is this, because it just talks on interest rates and what Wall Street is currently thinking about when it comes to that. But right now with it at $6.95, it is trading between this S2 and this S1. So $6.91, definitely just watch for that to hold over the next, I guess, hour or 2 hours, and possibly rolling over into next week. And then vice versa, $7.06 is going to be that next strong resistance. And then you'll have that $7 resistance that is brought on by options. So like I said, most likely it'll just trade between the 6.91 and 7 for the remainder part of today. On the actual chart itself, lower percentile of the Bollinger Band is now considered oversold based on the stochastic. You do see a bearish deviation, and number of retail investors are still getting out. So if you're one of those individuals that is selling, let me know in the comments below on potentially why. One thing I just wanted to share with you, I guess over and above that one video, is this right here. Some of the latest articles coming out. So big 5 investors in SoFi. So you do have Vanguard, BlackRock, Silver Lake Group, State Street, and Geode. So I think in reality, big institutions really do like SoFi behind the scenes and are quietly accumulating shares. As you can kind of see, Vanguard increased 1.36 million, BlackRock 1.3, and that was all in Q1. Even though Vanguard, BlackRock, kind of have to be somewhat skeptical about them. So yes, it's good the fact that the big institutions are in SoFi and continuously increase, but at the same time, they are very well known for lending out their shares. So a lot of people always question, why is there so much manipulation? Well, guess what? Obviously, Vanguard, BlackRock continuously accumulating shares and thus lending them out. This is why you do see the cost of borrow very, very low, and why it's very cheap for shorts just to continuously increase their position and manipulate SoFi. So even though this is somewhat of a positive, it's also a negative. So I just wanted to bring this up and clarify. But like I mentioned, I'm just going to quickly play this video, a couple minutes from this, because this will probably be the next big catalyst for the market as well as SoFi.
Centering on the future direction of interest rates, we want to bring in Alison Schrager. She's senior fellow at the Manhattan Institute and Brookings Institution's senior economic studies fellow, 𝗪𝗓𝗓. Welcome to both of you. Let's kind of start where Rick just left things. And 𝗪𝗓𝗓, this is one piece of information in a much larger puzzle that we're trying to piece together. But do you agree with Rick's general assessment that it's going to be a lot tougher for the Fed to raise rates? The market can be pushing back, and there are big issues we need to be watching just because of what it means for our ability to issue debt.
I think that monetary policy is being set with an eye to what's happening to inflation and what's happening to the labor market. I think monetary policy makers are doing their job irrespective of what it means for the cost of debt financing. Now,
on a side note, completely unrelated to what she is saying, when I watched this video for the first time, I could not get it out of, I could not stop staring at the background. Like literally, I was just trying to think, I'm like, is she in a jail, like, or like an addict? I don't know. It was just, I had trouble focusing on her, and this is, my apologies on the rant, it's just completely unrelated.
What they are paying attention to is how much pressure federal borrowing is putting on interest rates. And what that means is that the higher the interest rate is, because the federal government is in there competing with other borrowers, the higher that interest rate is, the more monetary policy makers have to raise interest rates to make sure monetary policy is tight. And so I think the direction is, the higher the the more federal borrowing we have, the more monetary policymakers have to raise interest rates. I think that's the direction of causality.
And Allison, in the meantime, as that's happening, how do you see the consumer shaping up on things? How do you see businesses shaping up?
Well, it seems like every piece of data we're getting each week is saying the same thing, which is demand is still really high in this economy. And as I said, we see this with the sort of bigger orders. We're going to see this with the consumer sentiment that's coming out in a couple hours. It just seems that we're in a really hot economy. And that means that I think with every data report, it seems like the odds of a Fed rate cut is getting lower and lower. And when it comes to interest rates, Wendy and Rick have made some really important points here. And I also want to add that as inflation gets stickier, it also starting to feel higher and more unstable. And that means rates like the 10-year rate are just going to be higher because the term premium, it's been a while since we've really had to think about the inflation and the term premium because inflation was so low for so long. That gets baked in too. Not only expected inflation, which the report in a couple hours still expects to be above 3%, but the risk around inflation, like the inflation risk premium also gets baked into the term premium, which means anything above 5 years, it might just be structurally higher for the time being.
So yeah, all in all, that's what the market is trying to analyze now, still trying to figure out. Citi actually came out earlier today and stated that it's not going to be in July anymore, that most likely it's going to be in September, the first and probably only rate cut in 2024. So it's going to be a very fun time. And so yeah, I think in SoFi's case, that might negatively impact it. Possibly, but once again, we'll just have to wait and see. Let me know your thoughts on SoFi. Give yourself a shout out if you've been buying, if you've been selling. And with all that, appreciate all of you watching.